This summary presentation represents the final project for Group 2 of Kettering University online course BUSN-659. Group 2 is a global team of learners comprised by Nancy Nagy, Francisco Luna, Samuel Patinato, Jason Pruitt, and Scott Rogan. This presentation will highlight Group 2's assessment of emerging foreign market options, selection rationale for India as the optimal choice, risk management plans, and strategies for ethical and sustainable global operations. Who is Shared Squared? Group 2 leveraged a hypothetical company called Shared Squared to help facilitate emerging foreign market analysis and definition of entry and operation strategies. Shared Squared is a fictitious U.S. operation enterprise that provides a mobile and internet e-commerce for person-to-person and business-to-person transactions. Based in the U.S., Shared Squared is seeking growth by entering India's emerging foreign market. Why India? India was selected over China partially due to China's plateauing growth, rising costs, and political ambitions. India has an attractive youthful demographic with a large middle class that's English-speaking and well-educated. India's economy boasts impressive sustained GDP growth, and the sitting government is working to address corruption and bureaucracy. Shared Squared's product solutions fill a sweet spot in India's market needs and is positioned to leverage India's vast, well-trained IT and software development talent pool. India's competitive landscape. India has a diverse competitive landscape that includes local, foreign, private, and state-owned enterprises. Shared Squared can proactively seek out opportunities to collaborate with non-competitive firms such as IT and software development experts. Potential providers of capital and awareness of large M&E operations are also valuable insights for planning Shared Squared's base of operation within India. SWOT analysis. SWOT, an analysis tool named from the acronym of Strengths, Weaknesses, Opportunities, and Threats, was applied to the Indian market. Clear strengths include the vast size of India's market and the desirable characteristics of a youthful demographic. Major weaknesses are Indian government intervention in business and rampant corruption. Emerging opportunities are a growing middle class of Internet users. Significant threats are increased regulation policy barriers and competitive moves to take Shared Squared's market share. Shared Squared will optimize their entry strategy to play to India and Shared Squared's strengths in order to exploit targeted opportunities while simultaneously countering known and emerging weaknesses and threats. Cavaskill, Knight, and Reisenberger refer to four specific types of risks faced by global businesses: cross-cultural, commercial, currency, and country. Group 2 carefully evaluated India's emerging market through the lens of each category risk. Cultural risk. There is a possibility that Indian consumers will not value the product and service offered by Shared Squared, or that they perceive the value proposition to be low. Consumers may also reject Shared Squared's e-commerce platform if elements fail to appeal to how Indians like to shop or fail to offer what they like to buy. Advertising is perhaps the most culturally sensitive element. It must be clear, convincing, and seen to ultimately be effective. Shared Squared plans to address such risks with advertising on high traffic areas like railway stations. Perceptions about the security of shopping online will also be important to proactively manage. Low participation or failure to reach critical mass adoption rate for any of these reasons, such as unfavorable cost of rural areas, is a real concern. Shared Squared will proactively plan for each of these cultural risks and will leverage social media like Facebook to capture and mine consumer feedback. Currency risk. There are risks associated with any foreign currency, such as exchange rate volatility and external manipulation, like short selling of currencies on the open market. Given that Shared Squared is an American company, a strong US dollar can risk American products as being expensive for Indian consumers buying in rupees. Inflation, government and fiscal banking policy too can be challenging issues. India's recent changes to banknotes in circulation caused extreme backlash and painful disruption. Shared Squared may consider operation as a subsidiary in India, with effort to maximize local content in the product in order to minimize the negative effects of taxes, duties, and inflation. Shared Squared may also consider to reinvest a larger percentage of the revenue back into the business at startup stage, or hold more funds in India to offset currency exchange fluctuations when funds are repatriated to the U.S. Commercial risk. There are almost innumerable risks in the commercial category bucket. Some of the most significant are incorrect pricing, poor marketing entry timing, and having the wrong strategy. Failing to promote the product properly or failing to gain sufficient awareness are real risks. Aggressive competition is always a risk, especially if Shared Squared is successful. Failing to earn sufficient profit is also a real danger, especially in regions with lower levels of discretionary spending, such as poor countries like India. Country risk. Finally, we have perhaps the greatest risk of all here in India's country risk. India's bureaucracy is infamous, as is weak respect for IP and rampant corruption levels. Government intervention in business has been a major barrier for previous MNEs in India. Enforcing legal agreements internationally is always messy and should be avoided by maintaining relationships or using commercial levers to apply compliance pressure. India has a relatively peaceful nation, but it does have contentious relations with neighbors, and terrorism knows no boundary. In summary, there are many risks that need to be navigated when entering India to do business, but Shared Squared's awareness and proactive planning are half the battle. The Lescant model is an acronym created by Dr. David A. Victor, which is a useful framework for addressing various cross-cultural issues that may arise from differences in language, environment, social organization, context, authority, nonverbal communication, and time. As Dr. Orlando Kelm highlights in his YouTube video lecture on the Lescant model, different cultures can have vastly different perceptions of each element of the Lescant model. Group 2 applied the Lescant model to India to better understand the potential cross-cultural issues that may arise when an American firm like Shared Squared enters an Asian market like India. Language. India and America share English as a primary spoken and written language, but they differ significantly in its use and interpretation. Environment. India's environment, even in urban settings, is starkly different than the U.S. Social. Social structure is extremely hierarchical in India and more stratified than America. Context. India is a high context culture, meaning that accurate understanding is contingent upon proper discernment of the circumstances in which communication is taking place. Authority. Authority in India is not equally distributed, and decisions follow a rigid chain of command that represents a high power distance. Nonverbal. Nonverbal communication is more important in India due to the higher context, and social customs reinforce their meaning. Lastly, the perception of time in India is polychronic, where investment in development of relationships is prioritized over expedience. The United States' modern, non-hierarchical, low context, low power distance, direct, monochronic culture can easily clash with India's financial metrics like gross domestic product that quantify a nation's ability to generate wealth are helpful in the evaluation process of emerging foreign markets. Gross domestic product. Evaluating India's GDP-based statistics against the US and China's metrics provide a relative benchmark for comparison. India's GDP, that is gross domestic product of the nation measured in US dollars, is growing, but still falls far short of the US and her closest rival, China. India's GDP current growth is above 7% and is outpacing both the US and China. India is healthy and growing with a very bright future. Gross domestic product per capita. When evaluating India's GDP on a per capita basis, India significantly lags both the US and China. India has a vast population that dilutes its wealth. China too is a populous nation, but accruing wealth more quickly than India while also limiting its population growth. Care needs to be taken when evaluating gross domestic product per capita, as India's wealth is not evenly distributed. Shared Squared can target profitable segments of the market with higher levels of potential discretionary spending. Gross domestic product parity purchasing power. Adjusting GDP to account for different costs of living via purchasing parity power, the story starts to change. Both China and India have growing purchasing power in their domestic markets. Sourcing locally within India will be key to providing the Indian market with affordable goods and services. Conclusions and recommendations. India is a challenging emerging market that requires foreign companies to bring their best game if they want to succeed. Winning in India requires deep understanding, attention to detail, tenacious effort, and a long-term focus. Companies such as Shared Squared are recommended to think in the following ways. Put the pieces together. Know what Indian customers want and exceed their expectations. Embrace a global mindset, but screen all actions through a local filter. In terms of business operations, focus on getting the fundamentals right for the Indian market. Never forget the 3 Ps: product, price, and promotion. Strategy is both simple and hard. Treat India as another domestic market. Anything less is a shortcut that will likely lead to disappointment for all shareholders. Corporate social responsibility is also simple and hard. Do the right thing, do it the right way, and do it for the right reasons. Manage the risks. Pay attention to Indian culture and ensure messaging is appropriate, understood, and effective. Respect cultural norms, but retain what is unique, special, and interesting. Carefully manage currency and be mindful of fiscal policy in both the home and host countries. Lean on locals to help for navigating India's complex political and regulatory landscape. Focus on managing commercial risks as they are the most under control of the firm. Spend the time to develop a robust strategy, watch for the right timing, and be aware of competitors. Adapt and innovate. Avoid a race to the bottom with competitors. Deliver unbeatable value rather than unbeatable price. Avoid being a commodity. Solve real problems and delight customers. View financial performance with a long-term mindset. Don't expect a quick win or try to grow too fast. Invest wisely and reinvest initial profits back into the market. Profit is to a business what air is to life, necessary for sustained survival, but not the point of existence. Profit is not the goal of good business, it's the result. View India's market through the lens of an entrepreneur. Look for gaps that need to be filled that others ignore. Seek opportunities to differentiate rather than copy. Technology is a great servant but a horrible master. Leverage technology as a means to deliver value and avoid technology for the sake of technology. In other words, don't fix it if it's not broken, but also don't cling to outdated technology just because it's safe and comfortable. No one is riding steam trains or sending telegrams today. Just because a market is poor and emerging does not mean it will accept outdated solutions. Good luck to Shared Squared and other firms like it who are brave enough to enter India. It will not be easy, but nothing rewarding ever is. Thank you for reviewing the final project presentation summary for Group 2. Please direct questions, comments, and general correspondence to any member of the group via email. In closing, Group 2 would like to issue a very special thank you to Dr. O'Leary and Kettering University.